You're watching Smart Money here on Bloomberg TV India. On one side, the festive season is around the corner, and on the other side, the Reserve Bank of India has banned 0% interest rate schemes on consumer durables. And this move is being considered by consumers as a dampener for the big buys. But are these 0% interest rate schemes as attractive as they sound? Let's have a quick look at what RBI has done and what does it mean for you. Vivina has the story.
In a recent move, RBI has instructed banks to stop offering zero-interest EMI schemes for the purchase of consumer goods. RBI's move comes as a way to discourage banks from offering such schemes. It has instead told banks to offer uniform interest rates and processing fee on EMI-based credit card schemes for retail products. According to RBI, interest rate charged on such schemes is camouflaged and is passed on to consumers as processing fee while making the purchase. In the circular, RBI has stipulated that in order to maintain fair practice, the processing fee and rate of interest should be kept uniform, and such schemes only serve the purpose of alluring and exploiting vulnerable customers. What is significant is that the notification has come just ahead of the festive season, when consumer good companies cash on the upbeat sentiment in the economy by offering many visibly attractive loan schemes for everything from phones to LCD TVs. In advertisements, mobile manufacturers and banks advertise that there is no processing charge. But if you read the fine print of the schemes, you can find some banks have started charging a processing fee on select smartphone products and for select tenors. It varies from bank to bank and even store to store. Generally, the average processing charge is in the range of 1 to 8.75% on principal amount for 3 to 9 months. So for a phone costing 45,500 rupees, processing charge can be as high as 3,982 rupees or 8.75%. Same is in case with the televisions too. The processing fee is in the range of 1 to 8%. So if you want to buy an LED television worth 99,900 rupees through a loan, it will cost you around 1,07,882 rupees. That is, you have to pay an additional 7,992 rupees. Sometimes some banks adjust benefits such as discounts by reducing the interest rates. While this makes the scheme attractive, the customer doesn't know that it is coming at another cost. To prevent such practices, RBI has said that it is the responsibility of banks to make customers fully aware of the discount benefits and pass on the benefits to them while sanctioning a loan.
0% free, etc., etc. in any way seems to be too good to be true, isn't it, Monika?
Right.
Explain to us why this is pretty irrelevant from a consumer's point of view, because perhaps there never was a 0%.
We spoke about that earlier, if you remember. We were on this show saying that 0% is not zero, it's 12 to 15%. So what do? They talk about 0%, but there are charges which are stuffed away out of your sight, which include, they will make you pay 2 to 3 EMIs upfront. So that you have to build that into the cost. There will be a convenience charge, there will be a processing fee, and you don't get the dealer discount which you would get if you're paying cash down. Now, there is nothing wrong with you taking that deal, 12 to 15% or even 20% interest, if you know that is what you're paying, right? So a lot of us would find it easier to stagger out the payments across 6 months or 8 months rather than make a big chunky upfront payment. But I think what RBI worries about, and what is also a matter of discomfort to us, is the deception, the unfair messaging which goes across in the 0% loan. Because it isn't zero, it is going to cost you. So as long as you understand that 0 is equal to 12 or 15 or 20, and I'm okay with that, I think it's fine. But RBI has said, okay, you can't do that. So my sense is there will be many other deals coming in different garbs, and I think people should just keep watching because we'll alert them to what is in store.
I'm sure
for them.
RBI heard you too, so they must have thought it's okay, we can ban this.
I don't know if RBI hears people, but let's see.
Of course, I'm sure they must have. All right, with that, it's time to address some of your financial issues. Nirav Shah has sent us this email from Mumbai. He says that he has 2 endowment plans that has a sum assured of 4 lakh rupees, but he says that he has to pay a premium of 16,000 rupees a year. He also wants to buy a term cover of 1 crore. So, Monika, what should he really be doing?
Switch for 1 crore if he wants that much of insurance. So 16,000 rupees at age of 35 to 40 will get him between 1.25 to 1.5 crore of cover. So if that is the amount of cover he wants, he has to switch out of these policies into buying a single term cover.
The only point is you don't get any money
You get,
as a
it's
return
like your car
there.
insurance.
It's like your car insurance.
If you outlive the insurance, nothing comes back.
Time for a quick break. But to get our expert opinion on your finances, you can email us, call us or SMS us. After the break, we solve all your money matters. Keep watching Smart Money.
To get our expert opinion on your finances, you can send us your queries at smartmoney@btvin.com. You can also call us on 022 4098 7098. You can also SMS us. Just type SM, give a space, write your query and send it to 977 327 0010.